Okay, so yes, this is part of the overall live stream for the day. So I started at 9:30 a.m. this morning preparing for the Kiwi news that we saw being released. RBNZ with their rate decision keeping rates on hold at 5.5%. We saw the Kiwi dollar drop to the downside. I'll tell you more about that shortly. Then we were looking through trades and charts and levels and possible setups through to now where I'm doing a daily market analysis together with you guys, and then after that we'll continue back into looking at the charts, okay? This is also being recorded and will be uploaded. This section of it will also be uploaded as a video, so if you want to skip through the live stream, you can also check out the video with just this section of the market analysis. All right, if you have any questions at any point in time, please feel free to put it into the chat and let me know. And for all the regulars and the newcomers, you can help me out massively by remembering to click on that like and subscribe button. Now, with all that said, quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only, as the contents of this webinar are not intended to be a recommendation to trade a financial product. So please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. That's done. Now take that away. Hey Linley, thank you so much. Now, with all that said, what has happened? Well, first off, the most recent one was at 10 a.m. GMT plus 8 this morning. We had the RBNZ, the Reserve Bank of New Zealand, with their official cash rate decision, their interest rate decision, keeping rates on hold at 5.5%. The overall market expectation was for the RBNZ to keep rates on hold. That wasn't a surprise. But the market expectation was for the RBNZ to come out sounding a little bit more hawkish, because they are quite well and not say well and truly, but they're progressing quite well with their fight against inflation, or to bring inflation back down, or inflation growth back down to its 2 to 3% target level. So they were expecting, or markets were expecting a little bit more of a hawkish RBNZ. But on release of the interest rate decision at 5.5%, the rate statement that accompanied the decision was actually quite, it wasn't hawkish, and it was actually quite, I wouldn't even say dovish, but a bit disappointing, right? A bit disappointing. And because of that, we saw the Kiwi dollar drop. So what was said during or in the statement was, well, policy to remain restrictive, expects restraint to lessen gradually, sees strong domestic price pressures, and you also see that they were expecting headline inflation to return to within the 1 to 3% target range in the second half of this year. So they're looking at getting to its target level within this year, but yet they were also still thinking or agreeing that monetary policy will need to remain restrictive for now, with the extent of this restraint to be tempered over time, consistent with the expected decline in inflationary pressures. So no big surprises there, no hawkishness. And what we saw as a result of this, immediately after the release of this news, was the Kiwi dollar sitting at 0.6127, or just below 0.6130. Within the hour, shot right down to as low as 6075. Right, almost at 6075, which was a good 50 pips drop to the downside. So we were looking at that as it dropped. First, no, I'll take that away. First, I was highlighting during the stream that rates were held at 5.5. Price at that point was outside of the Bollinger Band, so something to watch out for. And we were looking at it at that Bollinger Band level. It was at 0.61 price level, round number level to watch out for. So as it dropped, I didn't get into this. I don't know if any one of you got onto the Kiwi dollar to the downside. I think it was quite unlikely. We didn't expect that big move to the downside. But I wasn't ready to sell it down because I was looking at this as, I'll take that away for now. I was looking at this as it was pushing down. It was outside of the Bollinger, so I expected it to push back up slightly. And then also that, it might come back up a bit to test that round number level again. So I was chatting, you can scroll through the chat, I was chatting saying that I was looking for it to retrace and then maybe look to sell it down, but so far it hasn't triggered my setup yet to sell down, right? So I wanted to break past this previous low to sell it down. The main thing you also notice is that the support level on the Kiwi is at 6050, not very far away, about 40 pips away. So even if you do sell down, it's not a huge move. It doesn't look like it's going to be a huge move to the downside before we look for the next reaction. Okay, so that was the news from this morning with the RBNZ keeping rates on hold at 5.5%, coming out a lot less hawkish than expected, a lot more disappointing than expected, and that's why we saw the Kiwi dollar drop. Then, before that, what we had was on Tuesday, last night, at 10 p.m. GMT plus 8, we had Chair Powell. Remember Chair Powell? Chair Powell was testifying at the semi-annual monetary policy report, and he actually came out saying that this was the main thing. Well, one of the main things, saying that slowing job market is signal that rate cuts may be nearing. Right, rate cuts may be nearing. There is rumors or speculation that we might be looking at maybe 2 rate cuts back on the table. September might be the first rate cut, and then maybe one more at the end of the year. So it's about there, 1 to 2, right? He said it's not going to be sending signals about timing of future actions. He was trying to make this news event a bit less volatile. Holding rates for too long could jeopardize economic growth. And there was one more. High inflation is no longer the only risk for the US economy, right? It's not as just weakening labor markets. It's just as much a risk to the economy as high inflation. So we have seen on Friday last week, if I scroll back, on Friday last week that the US unemployment rate 4.1 is not at that level to really get worried, or for the Fed Reserve to really get worried, but it could get onto that slippery slope if it really keeps climbing. And you see that non-farm employment change numbers have seemed, not really, but seemed to have plateaued or slowed down a little bit. So the mandate for the Fed Reserve is employment, is inflation. Inflation needs time. They've done all they can. They just need time for it to get there. And then employment numbers, they're kind of shifting a little bit of focus to make sure that it's not slowing down too much. Okay, so I think that if employment numbers do slow down, they're likely to spur that rate decision, that rate cut decision, just so that they can try and stimulate the economy a little bit more to try and increase or try and stimulate the economy and push up more likely the employment numbers. Now, with that said, was it me or did I just see an ad pop up? That was weird. Okay. With that said, tonight we do have Chair Powell continuing on with his testimonial at the semi-annual monetary policy report. Again, questions coming and looking at the way he answers. I think that he's going to be trying to temper it down, not lead to such a high volatility event. Okay, I just realized I rambled on for a good 10 minutes now, so I hope it all makes sense to you guys. If you have any questions, put it into the chat, let me know, leave a comment, let me know. Hey Basanta, how you doing? Hey Diana, hey Augusto, hope you're well. Okay, with all that said, what else I want to look out for? Tomorrow we have pound GDP. We will talk about that tomorrow during our stream tomorrow. And the main feature for tomorrow is the US CPI data to be released. I'll tell you more about that during tomorrow's stream, but we're looking at CPI or inflation growth for the US, likely or looking like is going to get from a 3.3 to a 3.1%. Quite a good news. Needs to happen, but we'll wait for that. Okay, with all that said, now let's look at the charts. So dollar index, it has continued on from what we've been seeing over the last 2 days, right? So this was Friday, it stayed in that range. Monday, it stayed within that range. Tuesday, it tried to pop up. Late Tuesday night, it tried to push up a little bit before coming back down again. So it is still consolidating along that 105 support level. Let me take all of that away for now. Right, it's still consolidating along that 105 support level. You can see that trend line, that very short-term trend line, is still holding. Yes, very unexpectedly, Kiwi bearish, bearish RBNZ, leading to a drop in the Kiwi, even though they held it. Dollar index, we were here just yesterday. It's right at the same place. It hasn't done too much. Take that away. I'm actually earlier today, as I was looking at that and I was looking at it sitting there, I was thinking that it could push up. Right, thinking that it could bounce off this level and push up towards that. So it'll sit there and then push up towards that 50% level, which we see would coincide with those swing levels as well at 105.40. So I was quite happy with that, but it sat there, and then the hour before our live stream, or the daily market analysis, it dropped slightly, now showing a bit of a push back up. I would like to see, or I think what could happen is that it'll push up. Could see that pushing up until maybe tomorrow with the CPI release from for the US. Then after that, we could see that come right back down again, right? Especially if CPI comes out at the 3.1% or 3 maybe, going to spur that rate cut decision, going to spur that rate cut decision, which could lead to that weakness on the dollar. Okay, but now I would say that today being the 10th of July, it is consolidating at that 105. Well, I would say 105.10 level, which is right here. Okay, 0.10 level. I'm looking for breakout to 105.40. Right, for a breakout to 105.40. And then for a short term, and then maybe back down again, but I'll tell you more about that on during tomorrow's session. Okay, so I think that it seems like there is going to be downside, but it's going to take maybe something to happen to drive it down. In fact, I don't think we should say that's consolidating at 105.00 support area. I'll still keep that. It's still within that area that is consolidating. I'm looking for a breakout to 105.40 before possibly reversing back down tomorrow. Hey Jimmy, how are you doing? So with that, I'm quite happy with that. So, okay, that's going to hold back this level. I don't usually like to do this on such a short span of time, but let's see if that's going to tell us anything. Let's push up 23.650. Yeah, so it needs to stay above 105 for that potential breakout. Looking for breakout to 105.40. Price needs to stay above 105. Okay. Now with that, then looking at the Kiwi, take that one away. What we have, we're not looking, that was what we thought about yesterday, didn't happen. It is now sitting along that 61.8 level, looking for it to break to the downside. You could do a very short-term trade on this, following on from the news to the downside. If you're looking to sell down 6080, 15 to 20 pip stop loss, 20 to 30 pip or 30 pip take profit towards that support level. Right, you could be looking for that. Or you'll just be sitting there looking for a possible reaction along this support level, which also coincides very nicely with that long-term move and that 50% retracement level, the 50% retracement level from the long-term move up, right? Which we've seen a good bounce here on the 2nd of July. So now that if it trades back down, we're looking for a reaction along that support level. First, 6080, 15 to 30 to the downside. Right, we're looking to sell at 0.6080, stop loss 15, take profit 30. Then after that, you then look for reaction at support level 0.6050. That's what I'll do. Okay. And you see dollar index pushing down slightly, but yet we're still seeing the Kiwi dollar pushing down. So it's Kiwi weakness dragging it back down. You could look for that short-term move back down. Okay, then with that. Aussie dollar still sitting in that range, still not doing anything. Keep the same view. I think that it's gonna stay within this range, and it's very odd. Right? It's very odd that it's keeping within this range for such a long time. I do see that now pushing up. I'll keep that. Right, and this is a, well, top to bottom. This is a 37 pip range. Very tight on the Aussie dollar, and this was since Friday, since non-farm, even before non-farm, it came into that range, right? It came into that range. Sat there. I'm still looking for it to potentially break out to the upside as a continuation from that previous move up, but it's still sitting there, so gotta wait. And you see that by 6760 20 to 110 to the upside with a hesitation at 0.68. I'll keep that. No big surprises. Well, no big changes there on the Aussie dollar. Then, onto the second most annoying pair on the US yen. Good morning, Jamil. How are you doing? I'm doing fantastic. I hope you're well. We were talking about this on the Discord channel. Again, Discord channel link is there. Do make sure you join if you haven't already. But we were talking about this on the Discord channel. Diana was like, oh, it's moving. And right at that time, I think, at about 10, yeah. Oh, yen is moving, so excited, popped up, and then set right across. Right, set right across. I did a quick scalp. I think about right after our session. So I think I did a quick scalp about that point, and then one more as it popped up, but then it's just sat there right across. It did pop up early this morning. I'll move this aside first. It did push to the upside early this morning, and then after that come back down. I missed this move, 8 a.m. I didn't see that. By the time I saw it, I thought that it was a little bit too late. Wanted to see it retrace before pushing back up again. So what I'm looking at now is a possible retrace and then push back up. This 61.8 at 50 is broken, so we take that away. But this 61.8 is still there. That resistance now turned support. Is still there. So it stays, if it stays above this point, like that, I'll be looking at 161.50, 50.25. Yeah, so you're looking for it to bounce off this support level, get supported by the trend line, the bullish trend line, for it to push up. It might drop a little bit lower. It might drop a little bit lower by looking for this trend line to hold it. To push it back up, you're looking at 161.50, 25 to 50 to the upside. Okay. So dollar index dropping, that's why you see the yen dropping slightly, but I'm looking for it to push back up. 161.50, 25 to 50 to the upside on the US yen. Okay, so I'll show you, I'll draw up this again. expecting that to drop. We'll talk about that tomorrow, but what's likely to happen here on the dollar index is it's going to sit along this level. That's how we say consolidating along 105 support level, looking for it to break up to that 105.40 level. Okay, that's a bit cleaner. Then go England. Yeah, that's tonight. Okay, so go England, we're on the pound. Go England, we're on the pound dollar. We were just talking about this before the session, where someone was asking, I think it was Ronaldo was asking, you know, did I sell the pound down? That was at 11, 12 o'clock. I missed that move. Then after that, it just sat there in consolidation. Now with the dollar pushing to the downside slightly, we're seeing the pound dollar push back up. All right, we're seeing the pound dollar push back up, and you'll also see that it is right along that swing level there that it's holding. Okay, so none of this played out. Okay, then that head and shoulder, so that trend line was up to here, but now that it's broken, I don't think this makes too much sense to have this trend line here. Now, I don't think it makes too much sense to have this trend line here. I'll take that away. That head and shoulder pattern that we were talking about from yesterday didn't play out. It pushed down, swung to that 1.2780 level, failed to break, pushed back up right now. So I'll take these away. Okay, I'll take that away for now. Waiting for the MACD crossover would make sense. Yeah, we were just talking about that as well. So the MACD is still pushing up, right? Now, the point of this would be, okay, the point of this now, what I'm looking at is, there we go. Okay, it's going to, it looks like it's going to push up slightly. I think it's going to do that. It's going to come up to about that point or just before that point, sit there and push back down. So no more head and shoulder pattern and all that, but it looks like it might push up to this point before turning back down again. All right, so what I'm looking out for here on the, I don't actually need that. It doesn't do too much for me. Let me see. That would make more sense. Okay, what I'm looking out for here on the pound dollar would be for it to push up. So let it retrace, complete the retrace, look for a selling opportunity. If it goes all the way back up to the resistance area, even better so, because that will form a bit of a double top, where you see it push one time. If it goes all the way up, a second time, that will form a good double top for that sell down. But I think that it might come up to that 1.28 level and then push back down. Overall, the safer option would still be to look to sell it down. And this is a conservative approach, 1.2775, stop loss, 20 pips, take profit. You could go down to that 61.8, which is a good 70 pips to the downside. Okay, so that's what I would, you can go in a little bit earlier, a bit more aggressive, but I think the more conservative would be 1.2775. Where am I? There. Okay. 7.5, stop loss 20, take profit 70 to the downside. No more head and shoulder pattern. See, dollar holding that trend line maybe. Euro holding that 23.6, not doing anything. What you might want to see here is if we see a dollar strength scenario, or is there any news on the euro? Nope, nothing. Nothing big on the euro coming up. It all seems to come down to the dollar. I was actually thinking that, could we sell the euro down? While that looks like a technical possibility, a technical setup possibility, I don't see that as something very attractive to do. I think what might actually be better is you look for that breakout to the upside, 1.0860 stop loss. You can keep it tight at 20 pips. Take profit, you can go up to 55 to the upside. Right, so sit in that. So very similar to the Aussie dollar, where shot up, then it's sitting in a good consolidation, a horizontal move. You're looking for it to break out to the upside again. Right, and this could just come right back down to this point here, which is 1.0850. I'm happy with that. I'll look for that instead on the euro dollar, 1.0860, 20 to 55. If we see that big drop as well right now. Okay, where am I? There. Buy at 1.0860, stop loss 20, take profit 55 to the upside. You see that we're mixing our Kiwi selling, Aussie buying, pound selling, euro buying on a good news, bad news, or stronger, weaker dollar scenario. We have it covered, looking for those opportunities based on how price is moving across the different currency pairs. I'm happy with that. Then on to the US Swiss franc. Did not push up as much as we expected before turning back down. That we spoke about yesterday as a possibility as well. Now that it's pushing down, it's right in the middle of the levels. Dollar index trying, I don't know if it will succeed, but it's trying to push a bit lower. I think that on the US Swiss franc, the better approach would be, to look for reaction there at 8940. If it does break, I don't even think it will stop there. If it does break, you get further downside. So you're looking at 8940. You can go 8935. Stop loss tight, no more than 20 pips. Very generous at 20. Take profit at 40 to the downside. Okay. So US Swiss franc didn't retrace, but we're looking to sell at 0.8935, stop loss 20, take profit 40 to the downside if the dollar continues to push lower. Now with that, USCAD still sitting right across, no breakout yet. And this, you haven't noticed, I don't know, have you noticed this already? It's a very similar pattern right across the board, right? This one we tried that little small upward push, but if you think about it, it's got that downward move and set right across, right? And then we could be looking for that push continuation back down again. But it's all sitting relatively horizontally. Kiwi, Aussie right across, Euro right across, USCAD right across as well. So it's gonna get interesting. It does look like it might continue. It does look like it might continue through to the CPI tomorrow. Right? It does look like it might continue through to the CPI tomorrow, unfortunately. So again, if you don't see like you have that many trades to get into, don't feel like you have to rush into any trades, okay? Jamil saying US Swiss franc, I'm looking to buy. Yeah, if it's, you know, depending on that 8940 level, depends on what happens there. Dollar, I'm looking for that strength, so it might bounce. I'm just covering the areas there, waiting the level to get in. On gold as well. Okay, we'll get to gold shortly. Okay, so US CAD. We say this, consolidating, do nothing for now. I'll maintain that view. It's really just sitting right across. Okay, and then on to gold, right? Gold, yesterday I was thinking that if it breaks, Henry was telling me that I got a typo there, I did. If I was supposed to say if it breaks below 23.50, it could trade down to 23.20, but it held, right? It held. This was yesterday. It held at 23.55 level and pushed up, right? So no downside, wouldn't have triggered any trades. The trend line, this was during the stream I was saying, the trend line is providing that support to the upside. It looks like at this point now that we're going to see it come up to that resistance area and that long-term, well, relatively long-term trend line, not a very strong one, but something that started in May down to 2 points. Point 1 was 20th of May, point 2 was the 6th of July. It is pushing back up. There is that level to break. I would think that gold is going to trade up to that 23.90 level, but we're looking for a reaction there. I wouldn't trade it up. We're looking for a reaction at that 23.90 level. Look for reaction at 23.90 resistance level. Jamil looking for a short, but not yet. Yeah, I'm actually thinking that if it gets up there, my first thought was that if it gets up there, it could test and reject back down. That was the first thought. But it might also, if the dollar does weaken tomorrow, weaken significantly tomorrow with the CPI data, that it might break that resistance. More likely they will break that resistance and push up. Especially that to 2400 level quite close. Okay, so you have, I think the important thing here is to see what happens at 23.90 resistance. Okay, so there we have it. Any particular favorites? For me, I would say a quick scalp, relatively quick scalp to the downside on the Kiwi is there, available. Aussie is still sitting, and you see Kiwi pushing down, Aussie pushing up. There is a little bit of a break in the correlation, and that's why you see that on the Aussie Kiwi, a big push to the upside as Aussie gains and Kiwi loses ground, right? And if I zoomed right out on the daily time frame, you see that as it pushes out, that's the area that if it clears there 1.11, we might see it push up towards that next resistance level. Right, we're looking for it to test at 61.8 resistance. So it's going to get to that 1.13 level. That's going to get quite interesting. Okay. Then I was saying any favorites, any particular favorites. Oh, a lot of waiting there on the Kiwi. Kiwi is there. A lot of waiting to do on the Aussie. Yen is bouncing off and pushing up. I like that one. I'm quite keen on that. We have been waiting for a long time for that. I just want to see it test 162 again. Pound dollar not ready yet. More waiting to do. Euro dollar, a lot more waiting to do. Swizzy push down, bouncing back up slightly. USCAD still sitting right across. If anything, I'm only looking for that upside potential, but I feel like it's not ready yet. So key favorites, Kiwi to the downside, US yen to bounce to the upside. That's the two I'm looking for today. What are you looking for? Put it into the chat, let me know, and please remember, trade well, trade safe. Continue joining me on as we monitor how prices develop. If not, then I'll see you all tomorrow on the live stream again. Take care now. Bye-bye. Well, not bye-bye, but yeah.